HTJ.tax, the international tax firm for 6, 7, and 8-figure investors and entrepreneurs who are living that international life. Are you ready?
The implications of owning property abroad or having foreign bank accounts, personal or signatory and business accounts. Okay. If you own, I'll deal with the bank accounts first, right? So I think most people should be familiar with the foreign bank account report, otherwise known as FBARs or FinCEN 114. That's the actual form number. So it's not new. I know people behave like, where did this all come from? I think this dates back to 1970, 1971 with the Bank Secrecy Act. So any U.S. exposed person, whether it be an individual or a corporate entity, so a natural or legal person, if you can control a bank account outside of the U.S. and it's above a certain threshold, so the aggregate maximum balance has to hit a certain threshold, which is $10,000, then all the accounts are reportable, even those that are below that balance, or those that may be even dormant. Everything becomes reportable. So, and signature authority. Notice, even if you are not the ultimate beneficial owner of that account, so for example, because you're a senior employee with your employer, whatever company you work for, it's not uncommon, you may have signing authority over company accounts, even though it may be, it's one of those corporate accounts where you require 2 signatures and you're just one of them. Even that needs to be declared. So basically, yes, once the maximum aggregate balance exceeds that threshold, the FBARs are triggered. And if it exceeds a higher threshold for forms that came out under FATCA, Form 8938, I think it is. What commonly known as the FATCA form. So that is triggered by a higher aggregate balance, but you need to speak to your tax professional. So the bottom line is, if you're signing for, or you have control over any bank accounts outside of the US, it may be reportable. Speak to your tax team. In terms of owning real estate, if it is income producing real estate, then yes, obviously as a U.S. person, you are subject to tax on your worldwide income, right? So that goes without saying. So if it is that you have an investment property outside of the United States, then you need to declare any income that you may have that derives from that property, rental income, of course. All right. So if it's just, then some people say, I don't know what type of real estate you have, whether it is income producing or whether it's owner occupied. If it is just a piece of land or whatever. So the 2 scenarios typically where it's reported on your tax return, it's where that foreign real estate is income producing, and when you hold it through a structure. So when you are holding it through a structure, it may trigger that Form 80, it may trigger disclosure on the Form 8938, which I mentioned before, which is a statement of foreign financial assets, right? So it's similar to the FBARs, but the FBARs go to a separate team within Treasury, which is, I think, is a Financial Crimes Enforcement Network. And 8938, which to some extent, there's some variations, but it mirrors the FBARs, that goes to the IRS. So speak to your tax team, right? If you have investments in real estate outside of the US and you control foreign accounts. And especially when it comes to foreign accounts, the penalty for non-disclosure could be pretty aggressive. And it seems counterintuitive, but the way the IRS works, when it comes to domestic tax issues, it's fine, right? It's about paying your taxes, right? That's what the prime motivation appears to be. Now, when it comes to international tax, it's different. The prime motivation is disclosure. And how do we know that? We know that because if you don't pay taxes, then there might be an underpayment penalty. There may be interest. Interest, and depending on the amount, it may not be a big hit to your bank account, right? But if you don't declare that you have a bank account outside of the US, it's not just civil, but it could be criminal penalties as well. And the civil penalties, it could be up to 50% of the unreported balance. And the example we like to give is there was, I think he was a a medical professional. I think he was a dentist in Florida, in South Florida. And there are lots of cases, but this, because we have an office in Florida, it kind of was like on our radar. So this guy, he had an account in an offshore jurisdiction outside the US, and I think he had about $1 million in it, and he didn't report it. So the IRS held that he didn't report this $1 million for 3 years. So the penalty is 50% of the unreported balance. So the penalty is $1.5 million on an account with $1 million in it. So the penalties for non-disclosure for foreign financial assets are pretty aggressive. So it's important. And the penalties for not disclosing investments in certain foreign entities that exceed a certain threshold, it could be aggressive as well. You know, like the Form 5471 is $10,000 per year. And don't think the IRS are afraid to levy those penalties. They do. So when it comes to living outside of the US as a US taxpayer, the emphasis is on disclosure. Because some of these things, I mean, just disclosing the fact that you have bank accounts in whatever country you're in is not a big deal. It has no, usually, I mean, once you're paying tax on the interest, you declare it on your Schedule B and whatever, there is no real tax consequence to having money outside. They just want to know what you're doing. It's all about data, and they just want to know what you're doing. So please keep that in mind.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.